Thank you so much to all of you for being here. My name is Cate Ambrose. I'm the President and Executive Director of the Latin American Private Equity and Venture Capital Association. We're a trade group of 180 firms active in Latin America. And I can't tell you how delighted I am to be here to moderate this panel on Brazil this year. Obviously a country that is dominating the headlines. Really glad to see such a full room and that everyone is so interested in understanding what's going on in the country. And we have a great panel here to talk about the current and future situation in Brazil. I'm just going to briefly mention each of the panelists. We have on my extreme right here, Flavia Almeida, a partner with Peninsula Participações. Here we have Renato Lulia-Jacob of Itaú BBA International. We have Mario Mesquita, who's with Brazil Plural Bank, and then Piero Minardi of Warburg Pincus, and finally Tull of the Employees Retirement System of Texas. So in just a second, we're going to go to the panel and get a really great discussion going here, but I want to set up this discussion a bit at the outset and first start with a disclaimer that whatever is said in the discussion, make no mistake, Brazil is in the midst of a profound economic and political crisis. So there's no escaping that reality. And for those of you who haven't been following in the newspapers, the country has been hit by the fall off in the commodities super cycle and the drop in oil prices, a massive corruption scandal at state oil company Petrobras, which has led to the arrest of major government and also private sector leaders, such as construction magnate Marcelo Odebrecht and banking billionaire Andrés Teves, and then progressively incompetent mismanagement of the economy under 13 years of rule by the socialist PT party, first led by Lula da Silva and now by Dilma Rousseff, who won re-election with a 3% margin in October of 2014. President Dilma is in the midst of an impeachment process, which has been, the first round has gone through in the lower house of Congress, and it looks very likely that she'll be removed from power this month, and the next vote is on May 12th, and will be replaced by Vice President Michel Temer. And as a background or a piece to all of this, the real has depreciated from 1.6 to the dollar in late 2013 to 4 to the dollar, went to 4 to the dollar a few months ago, and then has been recovering earlier this year. So I actually was in both Sao Paulo and Rio last week for meetings with fund managers, and I was somewhat surprised to see that there hasn't been a dramatic pass-through to the real economy yet in Brazil. Despite the profoundness of the economic and market challenges that the country is facing, people are still consuming. Unemployment was at an all-time high before this crisis came around. So while unemployment is rising, there still has not been a dramatic shift, and actually significant sectors of the economy that are still growing. Again, I mentioned the depreciation of the real. Interestingly, the real has recovered fairly significantly against the dollar from 4 to about 3.5 so far this year, and the stock exchange is up significantly as well on the expectation of the impeachment of President Dilma and her replacement. Now, I just want to say that is an extremely naive response to the situation we're facing in Brazil today. There is no sudden endgame or resolution that's going to be coming into place by the removal of President Dilma. There is not a competent opposition that's got a plan that's going to be put in place and solve all the problems of Brazil. So again, I think there's been this somewhat naive response to the reality with the idea of the impeachment. And then, and I think this will be a lot of the context of the discussion, when you look at Brazil today, it's really a function of your investment time horizon, whether you have a short-term horizon or a long-term horizon. If you are looking at Brazil with a longer-term perspective, what's going on in the country today are signals to a great opportunity in the mid to long term. So we'll hear about that more on the panel, but there is an enormous amount to be optimistic about in Brazil in a 10-year or a 5-year horizon. Not in 2 to 3 years, but definitely in a longer-term horizon. There are many fundamentals in place and opportunities in the market that are not going away. It's a country of 200 million people with enormous potential consumption. And so we've started to see that silver lining in terms of the types of investors that are actually choosing to double down or move into Brazil for the first time today. just to mention a few, and many of these are member firms of our organization or people who are reaching out to us for information. Canadian Pension Plan Investment Board has a significant office in Brazil, which they opened 2 years ago. They did a big press interview a couple of months ago about how they're hiring for that office and increasing that presence. Sovereign Wealth Fund GIC of Singapore is incredibly active in the market, doubling down on lots of deals and putting more and more money to work. Family offices in the country, and we have one here on this panel, are extremely active. And then also strategic investors. We've actually been reached out by some large international firms that did not currently have a presence in Brazil and up until now, and see a great opportunity to buy at a really attractive exchange rate and, in theory, at the bottom of the market. I guess we'll see whether that's true or not. So having said all of that, I'm going to open up to the discussion, and I want to go first to Piero. Piero, when we were preparing the panel, mentioned that this is the fourth macroeconomics crisis that he has lived through in Brazil, and he did that in a variety of roles, working at private equity firms alongside Arminio Fraga, and now heading Warburg Pincus in Brazil. And so, Piero, I want to ask you, how is this crisis different, and how are you managing or expanding your portfolio and your investment strategy as a result of the current opportunities and challenges in Brazil?
Thank you, Kate. Thank you, everyone, for coming. Thank you, WIC Institute, for the invitation. It's a pleasure being here. I'm going to start from what is similar at this point in time. The similar thing here that we have with the other crises, and the four crises that Kate mentioned I've been through, are in my current role as private equity manager. There are others before that. But what is similar at this point in time, I would say, just remind all of us that Brazil is an emerging market, and you can expect crises happening in emerging markets. There's a lot of volatility, and Kate mentioned some of the points there. Currency spikes up and down everywhere. But it also reflects the fact, the volatility that you see, it reflects the fact that Brazil is the most liquid and organized market among the BRICS and among the emerging markets from the point of view of rule, liquidity, and capital flows. Okay, so turning to what is different, which I think is much more interesting for the panel here. I think this is very different from, for instance, from the 2003-2004 crisis when Lula took power for the first time. There's a lot of suspicions that they will not behave. It took 2-3 years to get confidence in the markets back. But in reality, at that point in time, we had an organized economy. We had an economy that was that created the basis for sustainable growth, which is not the case here. Here we are through a fiscal crisis created by poor fiscal policies, and I'm sure Mario is going to talk about it. And most of it, I believe, based on the fact that during the previous crisis, 2008 and 2009, Brazil didn't suffer that much. And the Brazilians here may recall the fact that Mr. Da Silva, president at the point in time, said that despite the fact that the world is being through a tsunami, Brazil has just a little wave, what they call the marolinha, right? And this is, on my perspective, from the point of view as private equity manager, related to the fact that that crisis was in 2009 was a deleverage crisis. It was a debt crisis, and companies and individuals in Brazil were not that leveraged at the point in time. And policymakers at that point in time, they misinterpreted the reasons of why the crisis didn't hit Brazil that much, and went to a very, very aggressive and risky fiscal policies that get us where we are. So this is the first difference. This is a crisis. It's not political. There is a political component to it, obviously, but essentially it's a crisis where there's a fiscal problem here, right? So what can we expect at this point in time? Again, as private equity manager here, it's a very long U-shaped recovery for the country. We don't expect the country to be back to sustainable growth path in less than 3 or 4 years. And this is also highly dependent on this new government coming or election 2018, where the leaders get enough Congress support to make fundamental changes in the fiscal policies. And I'm sure Mario is going to talk there. I'm not going to spend the time here on that. What is different at this point in time also is the liquidity crush in Brazil. Banks are not lending money at this point in time. There's no capital markets. There's no new lending to companies. This is based on, there's been a huge consolidation in banking system in Brazil. I'm sure many of you had followed that. and that gave, I think, enough power for the bank system to be stable. But on the other hand, banks are still evaluating how much this car wash crisis and corruption crisis is going to hurt their clients, going to hurt their balance sheets, how much delinquencies on individuals, which are increasing very fast. I mean, you can imagine poor people in Brazil who borrow money paying 50, 60, 70% a year of interest rates to buy cars, to buy goods that depreciate very fast. There are many delinquencies coming from this type of loans, and this banks have not been able to access that. So there's a strong liquidity crisis. So this is affecting companies very much. And again, what is different as well, to Kate's question here, is despite of everything, different from 2003 and 4, we as private equity managers have not seen yet bargainings coming to the market. Mm-hmm. There's been an immense flow of strategics and funds taking positions in Brazil, taking contrarian positions, buying into real strategic assets, and paying double-digit multiples, and some of them paying double-digit multiples, EBITDA multiples, with the Tull in front of them. We saw some recent transactions happening there. So in reality, despite everything that we're seeing here and the crisis, whether this is because there's a lot of liquidity in the world, whether it's because many players decide to take a contrary view, take advantage of the opportunity, buy into some Brazilian companies, some of them with balance sheet distress opportunities, etc. The reality is that we haven't seen bargainings coming to the market yet. In 2003 and 4, we would buy very good, excellent companies at private equity managers paying 6, 7 times, 5 times EBITDA, and I can mention at least 10 examples of that here. That didn't happen yet. I'm not sure whether it's going to happen or not. It might if the crisis extends, but still, this is very, very different from what we saw before there. So how are we playing, or how are we managing the opportunities where I see this going at this point in time? I think that, one, what is different at this point in time from the point of view looking forward is that institutions, from the point of view of private investors, are much better. They're working. Some of them have been tested. And I just give one example here, is the fact that the X group from Mr. Ike Batista went bust, and no one even noticed that happened. I mean, so it tells you something about how well some of these institutions are working in Brazil. So the system has been able to absorb some of these extreme shocks and keep working naturally there. This is very, very, very important to point out here. And there's a lot of other institutions which are working there. Country keeps being very diversified, very entrepreneurial. Brazil keeps being one of the few opportunities where a private equity investor can invest into companies and not necessarily into the country. And it doesn't happen, I think, anywhere else in Latin America. So there's a bunch of very interesting companies. I mean, you take the secular mega trends, they're all happening in Brazil at the same time. There is, I mean, talking about healthcare, about education, about infrastructure needs, that may be the very first turnaround that we're going to see from the new government, the new concessions. That would be a great opportunity, a great sign that this new government may be able to issue. But take all these vectors and take the geography of Brazil, take agribusiness. There's a lot going on. We have a portfolio of 6 or 7 companies in Brazil. 2 of them are growing real terms, more than 10% this year under the crisis there. Specific sectors related to service, related to animal, pets, pet business, etc. They keep growing despite of everything, and there's a lot of different opportunities there. So still, the way to manage depends on how each one of us approach the opportunity there. But as a private equity manager, again, it's not the first, it's the 4th crisis. There's always opportunity. You've got to be careful. There's a lot of management talent, very interesting companies, very interesting opportunities there, an economy that still works. And if one is able to get the right position on a rebound that may happen in 2, 3, or 4 or 5 years, and we're sure that that's going to happen, and these companies will be the first one out of the crisis. They represent a very great opportunity.
Great. Thank you, Peter. So animal health care, I heard that. I know you have in your portfolio. Brazil is, I think, the second or third largest animal or pet market in the world globally, and education and healthcare are both also growing strongly. So going to Renato, in your role at Itaú, you have the pulse of M&A activity in the country, and please talk a little bit about how you've seen M&A activity evolve over the course of the last 18 months, and specifically what types of sectors, what strategies are you seeing the most emphasis, what kinds of international players or domestic Latin American players are coming in, and if you can name some specific deals, that would be great.
Sure, thanks, Kate. So, despite of the economic crisis and the market volatility, actually M&A has been very intense in Brazil in this past few months or year and a half. Just in 2015, we completed 59 transactions in Brazil, which puts us in #1 rank in Brazil and Latam. And out of those 59 transactions, for the first time as well, majority were cross-border transactions. Cross-border, I mean either the seller or the buyer were located outside of Brazil. Actually, 60% of transactions were cross-border. And where the money is coming from. So mainly equally from North America and in Europe, and massively from those two regions. And then Asia picking up, and Middle East, especially sovereign wealth funds, is starting to print important deals as well. Then if you look into sectors, you can basically split in two parts. So in one hand, you have those sectors that investors perceive that valuations are interesting, not a bargain as Piero pointed out, but lower valuations. So in that bucket, it's basically real estate, infrastructure, and the utilities. And then the other bucket are sectors that outperform the economy. So you mentioned several of them. So healthcare is #1, education, and specialty retail as well. So those are sectors that, despite of the current crisis, they have been outperforming the market, as Piero said. Companies growing more than 10% a year in real terms. So those companies are definitely not cheap. The valuations are higher, but there's definitely interest for them as well. And then basically the discussion with our clients it's exactly what you pointed out in the beginning. So how do we play short-term volatility versus long-term fundamentals? And that's a key question. So you have effects that plays a bigger role, have valuations that depend on the sectors, might be more attractive or not. And we're not sure if it's going to take 3-4 years, but it's definitely it's going to take more than a couple of years for the economy to come back. So, companies are deciding, how to play that. And then, just to mention a couple of transactions, I mean, so you have either companies that already have invested a lot in Brazil, and they decided to, double the bet. So we advised British American Tobacco, it's one of the large cigarette companies. They decided to delist their subsidiary in Brazil, and they put $3.5 billion to delist their company. So that's a case where a company that's been listed for 6 years, know the market well, and said, listen, this is at that valuation, I'm going to buy back my shares, and put $3.5 billion to do that. Then you mentioned some of the Asian investors. So GIC did a couple of interest transactions. Last one being buying a large stake in one of the largest hospital chains in Brazil, going back to the healthcare sector. I mean, it's a great asset, and they took an opportunity to buy that. And again, in moments like that, even if the valuations are not cheap, what you're going to see are assets that wouldn't be available otherwise, because investors wouldn't be willing to sell. No, they might be willing to sell, either because they need to do so, or because they're just tired of playing that game and want to get rid of the assets. So it's a combination of assets being available, price is right, effects make sense, and that's definitely driving the market. And we've been as busy as ever. Beginning 2016 is the same.
Okay, great. Good to hear that sellers are willing to sell as well. That's been a problem in the past. So going to Flavia, you're investing on behalf of Abilio Diniz, one of Brazil's most successful entrepreneurs and founder of Pão de Açúcar supermarket chain. And you're able to employ a long-term strategic view of the current situation. So what is your take on the macroeconomic and also institutional environment in Brazil today? And where are you placing your long-term bets in Brazil?
Thank you, Kate. Thank you for being here. So I think the long-term game is very important, and you have to be, as we discussed before, I think for families and for institutional investors that do have the patience and the strategic view of the long-term bets, moments like these, when you know the market, when you know the fundamentals, can be great opportunities. So in that sense, I think the long-term view is positive, and it brings good opportunities that weren't being able to be tagged because people weren't willing to sell, as discussed before. But you have to bet on the long-term trends, and that's where I think family offices tend to be lower risk because they know the economy so much. That's good, and that's bad. That's bad because when you look at Latin America, these are the players that usually are there betting on the long term and not helping the capital markets to develop in the long term. So it's a cycle that if we don't see it sustainable, you'll get back to the oligopolies and let's say the families managing, which in a way it's good and in a way it's bad. And quite frankly, for me, when I look, I think the last 20 years in Brazil, we were developing quite well in getting in a more entrepreneurial, in a more dynamic, and in a more open capital markets dynamic. So that's what worries me in the short term to get there, is we shouldn't let the long-term view destroy the capital markets that we've been trying to develop. And Brazil was ahead, institutionally is ahead of other markets. When you think about not only Latin America, but even when you think about China or even India, there were institutionally the system was much stronger, and it's still much stronger, but with signals of worries in that sense. So going back to your question also in terms of what are our bets, we still see Brazil, and obviously there's the DNA of what our team and our investors. So we still see Brazil as a very solid and dynamic local market. So we do have significant bets on the market itself, consumer, retail, and so on. The consumers in Brazil are very dynamic and are very technology driven. So there are a lot of consumer trends, the mega trends, the convenience trends that are very important in Brazil. But we also see Brazil as a global platform for some sectors, as Piero already pointed out. Agribusiness is one. In some place of commodities and mining, it will be another one in the future. So there are areas where you see the competitive advantage, and it's even though with the macroeconomic instability, these advantages, they're beyond the local instabilities. Just to finalize, I think I've been through probably the same crisis that Piero, probably one less, Piero.
You're younger than me.
one less. But I have to say, that's one of the beauties of Brazil also, is that the political crisis and even the economic crisis have not yet stopped the entrepreneurship and the economic, let's say, vitality of the country. And again, my view is that this one is different, as Piero said. It will need a lot of fiscal reforms, which will be painful, and it needs to happen. There's no way out, in my view. But you still have the vitality. That's why we went there, and you saw there's still the vitality, and I don't think we'll lose that. I tend to be optimistic, even though there's a very tense moment in our country.
I just want to highlight, though, that you are obviously heavily invested in food and food retailing, and also you have a separate strategy in education.
In education, yeah.
Right?
I forgot that. Yeah.
And
which we believe, again, it's very important. And our view is that it's important for Brazil. It's a trend. It's a very important demand. But it also, again, it's tied to technology also. Because we see that, on technical education and even higher education, there's a great opportunity to bring technology into mass education in a much more efficient way. So this is not only Brazil that we see this as a potential opportunity beyond Brazil as well.
Great. Okay, going to Tom. Tom is one of the probably few institutional investors that has experience in Brazil dating back all the way to the 1980s, so definitely one of the more sophisticated institutional investors in the market today. Tom, if you could just talk a little bit about your current exposure to Brazil, particularly on the private capital side, investing either through funds or co-invest. So, how are you accessing that market, and what opportunities and sectors and strategies are you looking at today? How are you reorganizing your portfolio based on the current situation?
Okay. Thank you, Kate. It's a sincere pleasure to be here, folks. First of all, just to sort of set the stage, one, we are a global investor at ERS. Two, we are very long-term investors. We're invested in a variety of different areas throughout the world, Brazil included. But yet we're pragmatic, and we also recognize that the perception of risk and reality can sometimes vary in interpretation. So we can be very opportunistic. We recognize the problems in Brazil, as many of you do here. They run the gamut from economic challenges, political environment, the likes of corruption. We've got the Olympics coming up and a variety of other things. Yes, inflation. Yes, concerns over corporate wherewithal. But bottom line, we've gone through a pretty good year to date in terms of stock market performance. A lot of this has been discounted, and that's usually the reality of markets. I learned this a long time ago. When I first started investing in Brazil back in the late 80s, this was the time when we had 4,000% inflation. Okay. When you wanted to cover your hotel bill, you went to a taxi cab on the block and you negotiated your rate to pay your hotel bill. You also had everything being indexed at the time. And it wasn't until we saw Brady bonds and a variety of other vehicles that things actually turned. But at the time, it was dismal. We saw the breakup of Petrobras, Electrobras, and a lot of the other government entities. And with this came opportunity. And I guess where we come down is we feel there are always opportunities in the marketplace. It's just a matter of doing the homework and spending the time. Right now, we are underweight in Brazil. A lot of the same areas that have already been mentioned we're invested in. We have been peeling off some of our profits more recently. The market's up over 20%, just in terms of local. It's up another 10 plus in currency. But we're waiting for better times. Yes, there will be a period of transition with the new political party. Yes, we're waiting for better fiscal policy and the like. But in the interim, we see more opportunities on the private side. And with a lot of the turmoil that's taken place, whether it's with Petrobras or other, we're finding where we can go in and invest in pieces of these companies that are being forced to sell off in other countries or within Brazil on the one side through the private equity side. And two, we're also finding that on the banking side, a lot of the banks are losing a lot of their ability to provide capital to firms that need them in terms of debt issues, but yet you can get fairly good loans. They're fairly well collateralized. And three, with the Olympics coming up, there's been a lot of investment in real estate. And with that, we're looking to the point where after the Olympics, there could be a lot of real estate hitting the market, and people will want to reduce their debt. So we're spending time kicking tires in Brazil to that effect. And then finally, hedge funds. We're just now beginning to see more hedge fund activity in Brazil, an opportunity to go long and short, different opportunities. So that, to me, with crisis comes opportunity. And as a long-term investor, we're definitely spending the time and effort to take advantage of this as we go forward.
Great, thanks, Tom. Okay, and finally, but definitely not least, Mario. Mario, in addition to working for Brasil Plural, I should say, it may very likely be the next central bank governor of Brazil, not recently. So he is perfectly positioned, and we said he's going to answer everything that's going to happen in the new administration, and it's really not fair. But Mario, assuming that President Dilma is impeached in another week and Michel Temer steps in, just if you could talk about the key policy challenges that new government is going to face upon taking office, and how do you see Temer executing on this, and what's the likelihood that he can achieve any level of success or implementation given the need to get political consensus around change?
Okay, thanks, Kate, for the kind introduction, for the invitation. Thank you. Thanks, the Institute. I'm very happy at Brazil Plural, so that's what I have to say about the central bank. Now going to the question you posed. I mean, Brazilian public sector debt was about half of GDP, a little bit above that, 52% of GDP until 2013, the end of 2013. Is going to be close to 76% of GDP at the end of this year. So that tells you right off the bat that there is a fiscal emergency in the country. So the first priority of the new administration, whenever it comes into office, will be to tackle the fiscal emergency. In order to tackle the fiscal emergency, Brazil needs to implement a number of reforms, starting with the social security system and extending into laws that we have in Brazil that need to be changed, that basically earmark the lion's share of federal government revenue. So it's very hard for the government to actually have an active fiscal policy in terms of fiscal retrenchment, because its revenues are earmarked. They become spending automatically, okay? And this takes congressional support. The impeachment vote got, the impeachment got 367 yes votes in the lower house. That is the kind of starting point from the coalition in Congress that is going to support the new administration, okay? So as I said, the new administration will need to pass reforms. To change the Brazilian constitution, you need 308 votes. Impeachment got 367. So even though not all of those 367 are going to vote for reform, one has to assume that Mr. Temer will have a solid starting base to implement those reforms. Unlike President Rousseff, who is a technocrat, Mr. Temer is a professional politician. He was the Speaker of the House 3 times. He has been the president of his party since 2001. So he is pretty much used to and likes to deal with other politicians. And that's how you get things done in the Brazilian Congress or in any Congress, anywhere. So by experience and given the starting point, Temer should be in a good position to implement reforms. It is critical, in my view, that he starts to address fiscal issues and to try to pass reforms in Congress within the first couple of months of the new administration. We have local elections in October, then we have to pass a budget before the end of the year. So the window for Temer to start really getting things done is between now and the mid part of the year. Of course, we have the Olympics then in August, so we have 2 months. The good thing is that we'll know within these 2 months whether or not the administration will be successful in addressing the fiscal challenges. What worries me, we don't know fully what kind of opposition the Workers' Party will pose to a Temer administration, although they have been saying that they're going to be quite aggressive in their opposition. And we don't know also the kind of resolve that the people around Temer will show. Up until last week, all the talk coming from the Temer camp was that, okay, they know the priority is fiscal, they know that within fiscal they need to cut spending rather than increase taxes, and they want to start fast. Now, during the weekend, we started to see some politicians indicating that they may backtrack and try to take a slower approach to reform. I think slower probably won't work. The political capital of any administration starts to erode the moment the administration starts. If they wait too long, then when the proposals, the fiscal reform proposal hit Congress, the administration would already have been quite weakened. So urgency is a critical point, and they need to have that sense of urgency. They apparently are going to have an excellent team at Fazenda, probably led by Mr. Henrique Meirelles, whom we all know and respect, and who has a tremendous transit with the international financial community and the local business community, as well as the political class. So he's in a great position, but they need to start fast, right? From day one, perhaps as early as next week.
I seem to remember hearing infrastructure will be another opportunity to really push. The government has crowded out private investment in infrastructure for a long time now, but that will be one of the area where a new administration will be opening opportunities for private sector investors.
True. Infrastructure mostly along within the transportation sector. You know, if you've been to Brazil, it's pretty is lacking, right? It's very outdated. So there is already a lot of investment taking place in Rio because of the Olympics, but this needs to be extended to the country as a whole. And this administration, apparently, the people that are close to Temer have indicated that they will remove some of the impediments put in place by the Rousseff administration to try to capture more foreign investment into the infrastructure sector. And it needs to be foreign investment because a lot of the local construction companies that used to invest in infrastructure got involved in Lava Jato. So you have to have increased foreign participation in infrastructure in Brazil.
Yeah,
Okay. And if I may add on
Lava
that,
Jato is a car wash corruption investigation. Yes.
and there's no lack of money. That's the good news. There's no lack of money willing to invest in infrastructure in Brazil, for both on the equity side, and you mentioned the Canadians, for instance, but also from a debt point of view. What lacks is a regulatory framework that and clear rules that allows investment to make the right decisions and take their money back. So that's again. So if they actually do that, if they make the rules clear, take all those barriers, investors willing to put money to work. There's a line waiting.
Quick question though. How likely is fiscal reform, do you think?
Well, I think it's
50-50?
some,
Yeah,
I would say a little bit above 50-50, but it's not 80%, so 60-65%. Okay. Because people know there is no alternative, right? I mean, for a long while, the Brazilian Congress simply adjusted the fiscal accounts by raising taxes. We have reached a level of taxation that is way higher than any other emerging market, and the country cannot stand it anymore. For the first time, and I have been meeting with politicians for 15, 20 years, the last few years I sensed a sea change within the political class. They always accepted to tax a little bit more, and they didn't want to talk about expenditure restraint, and that seems to be changing.
Great. Well, so one of the topics we wanted to throw out for discussion is around currency volatility and the depreciation of the real and how that's affecting both opportunities that might affect certain sectors and the need for reform. Mario, if you want to speak to that first, and others want to jump in on how it's affecting their portfolios.
Yeah, this volatility, I think, has reflected not only domestic developments, but also developments outside Brazil. For instance, if you look at iron ore prices, at some point, they were up 55% year to date as a result of policy stimuli in China, right? And iron ore is a big export by Brazil, so that also helps lift our own currency, the BRL. One problem that we have is that Brazil is a fairly closed economy in terms of foreign trade. Being a closed economy, the market, FX market, tends to be, it's large in absolute terms, but narrow from the viewpoint of the economy. So that helps, makes the currency more volatile than it would be if we had a more open market. Okay, so that's something that the new administration could also work on, is to try to increase openness, and as a result of increased openness, we would end up with a less volatile exchange rate.
In that sense, Mario, as well, the central bank has been very active in the FX market.
Yes.
Just in the past 2 weeks, when according to as Cate said, bullish, sort of like momentum turned into Brazil because of potential impeachment, etc. The real started appreciating a lot, and the central bank bought via derivatives over $30 billion in just 2 weeks. Otherwise, appreciation would have been even higher than it was. So. Yeah. It's a small market, it's narrow, and central bank is very active. So it makes things more complicated from an investor point of view.
Yeah, so it's very easy to manage a private equity portfolio that volatility, as you can imagine, right? But nonetheless, I think that obviously the volatility that we have today, to your question, it's much higher than the normal volatility. Let's call it this way. And things are happening not in 1 year, but or in 2 years. They're happening in 2 or 3 weeks, right? So, and this obviously is a challenge. But from the point of view of long portfolios like private equity, we see a tendency. First of all, no one invests everything in 1 year. So we invest along 2, 3, or 4 years. So there's a sort of, mitigation of the FX factor on your portfolio there. Second, it's also the fact that if you're buying to equity growth companies or growth companies like we do at Warburg, there is a tendency on the long term, probably longer than sometimes our holding period, but inflation and growth are going to walk not in parallel, but going to be pretty much getting the devaluation as well. So there's ways, not perfect ways, to mitigate that, but managing a portfolio that you build along the years, that's the only way that you can sort of dilute the FX risk. But not with the volatility that you have today. This is a different animal. Okay.
Of course, from a dollar investor standpoint, that's great. We like a weak currency because that way, as a long-term investor, we can deploy capital and make money accordingly. The other side of that is that also with volatility, you have expected rates of return are going to be a lot higher than they would be otherwise as well. So, on a relative basis, it works as long as everything gets worked through. But,
you mentioned you're underweight. I mean, and to what extent is the valuation of the real affecting your willingness to sort of put more money to work in Brazil today?
Well, I mentioned on the public side we're just slightly underweight. We have about for perspective, we have about 5.25% of our trust, which is about 27 billion, invested in emerging markets worldwide. Within that, piece is in Brazil relative to the equity markets. In fact, we have more money invested in the public market than we do in the private market in Brazil, but that's why we're putting more attention in the private side. It does affect it, but we've had a good run, and because we've had a good run, it makes more sense to peel off some of these gains. Particularly, we're not invested in iron ore. We're waiting for China not to have a hard landing and have things turn and improve. But when that does improve, then there might be an opportunity to look at iron ore. We're not invested in energy. We're invested more in the areas that have been mentioned, hospitals, education, and so forth, foods. But again, a lot of these companies were selling it more like 9 times at the beginning of the year. Now it's closer to 11 times. So it makes sense to pare back.
Okay, so one of the other new strategies that we've been hearing about, obviously in the current context in Brazil, is distressed investing. Everything from firms like Apollo becoming active in the region. They actually just announced something that they're looking at, I think, in conjunction with Vale, the mining company, non-performing loan portfolios. Mario, if you just want to talk a little bit about, distressed investing, because Brazil Plural has a distressed fund, right?
Yes, we do. Yes, we started out in late 2013 with the distressed assets unit in the bank as a kind of a counter-cyclical center, right, a revenue center. And little did we know that it was going to boom, right, this industry alongside the recession, right? So it has worked well for us. We launched the fund. We have been involved in restructuring about 15.5 billion reais in debt, in advising a number of companies. As you can imagine, the focus of distress started out in the Petrobras supply chain, as the company started itself to be in distress. But it now has spread throughout the economy. So we have companies, we are advising companies in retail, capital goods, still in the oil sector. It's pretty widespread, so it's a booming business, but it also reflects the depth of the recession we are seeing in the economy right now. We have seen increasing interest by investors, by some family offices in this kind of exposure, and we are still thinking about coming to market with other opportunities in the months to come. So again, it's a counter-cyclical business for us. It's kind of counter-cyclical investment for some of you. There are plenty of opportunities in Brazil, and talking to the banks, which we do, we are counterparties to other banks that are involved in credit. We are not. That's why the firms come to us, right? There's no conflict of interest. I'm afraid that the opportunities in the distress area are only going to grow at least the next 12 months or 18 months.
How are other panelists taking advantage of the distressed opportunity? Piero or Tom?
No, we're definitely taking advantage, and in fact, we are constantly engaged in looking at distressed debt, not only in Brazil, where the banking system has plenty of opportunities for that venue, but also we're seeing it worldwide. You know, with the likes of the reinterpretation of Dodd-Frank on an ongoing basis, it provides tremendous opportunities to get into areas that the banks are moving out of. So, you know, whether it's litigation financing or receivables or energy loans or what have you. So it's worldwide.
In my case, it's not really distress, but one thing that we're seeing, and it's been an opportunity in the private equity arena, is a much more creative negotiation with the entrepreneurs in terms of our entry structure. So it's not pure equity. We're doing a lot of structures with mezzanine or with convertibles that were not even accepted by entrepreneurs in the past. And it hedges a little bit or a lot our risk, especially in the mid-market side. So it's been much more accepting, and hopefully something will be announced next week, which is really in for us a deal that is really something that we've been designing for we've been discussing with this investment over 2 years, and now they came back under the conditions that we wanted them to be. So it's not really distress, but it's being more creative on the deal structure itself and more reasonable, and especially managing our downside risk.
Yeah, but that's exactly what's going on. It's the fact that there's a lot of very interesting companies which had a balance sheet problem, a capital structure problem, and this becoming an interesting opportunity. There's not distressed companies, distressed balance sheet opportunities. So that's where we're seeing a lot of
sound businesses.
and this. I mean, the great companies that they cannot get credit from the banks.
Yes.
That's a great opportunity there.
Anything to add on that?
Yeah, it goes back to what I said in the beginning, though. So it's a combination of, valuations that are attractive, good FX entry, and then assets that were not available otherwise now coming to the market, and that's definitely the case. So then you get use printed. So that's why we see a lot of M&A activity despite the volatility.
Okay, so elephant in the room, we have to talk about corruption. Again, I was trying to remember the figure, if it was hundreds of billions or tens of billions of dollars in bribes being paid in the Lava-Jato corruption scandal. Who wants to take a crack at, what is going to change, the level of corruption that existed institutionally in Brazil and how that's going to evolve going forward?
You want to call me the elephant?
Piero and Flavia both.
I have one sentence. Crime and punishment. I'm very happy because I think Brazil was an adolescent, was a teenager without any consequence, and this is the first time we're seeing real consequence on what we do. So from a personal point of view, I think this is an evolution of a democratic system, and this is for me a positive thing. It's painful, it's shameful. Quite frankly, it's shameful for us Brazilians, but it's there, and it's there. It's a political financing structural system. It's not, and it's something that if we don't change the funding system in the political parties, this may happen in different ways and shapes. But I think I'm happy it's in a way from a consequence point of view. I'm very happy it's happening, and it's taking shape, and we are not accepting it. We're not accepting. And the social networks have been amazing to change Brazilian activism and perception on that. So I think it's a transformational moment in that sense. Piero?
Yeah, but the risk here, is we cannot stop it halfway through, and this is something to watch very careful. The dimension that this thing on corruption took in Brazil in the last 13 years, given the party system, the finance of campaigns, etc., the way that this was taken by the PT as a way to create their power or their project of power to stay forever, this gained dimensions that go you see the numbers, okay? So I don't have to mention that. So and this is the beauty. This is the let's say the half full glass of the story here is the fact that we are facing it. There is a very smart, prepared group of managers and prosecutors and attorneys who decide to put an end on that. They got support of the people. And people who saw the demonstrations in São Paulo in March 13, where you have more than 1 million people on the streets. I mean, the hero there was Sérgio Moro, who's the judge running this whole thing there, you know. And this is why this cannot stop. And this gotta get into the end and put in jail whoever needs to be in jail. And it's happening, including politicians and maybe people from the new administration. Very likely, actually, to be there. That cannot stop. And it's another proof, honestly speaking. As a Brazilian, again, I have to say that we are different from most of the emerging market countries. We are different from most of Latin America countries. You know, we have institutions that work. We have a free press. The press has played an incredible role in what's going on in Brazil today, and you don't see that in other parts of South America. Okay, the press, the social networks, people not accepting that into a limit, and that's exactly what is behind of everything that we see here. You know. And this new administration, they gotta work under this new framework. Otherwise, they're not going to be successful either.
Yeah, some of the people in the government and labor movement have been saying that car wash is to blame for the recession, or for part of the recession, so it's bad for business. It's bad for bad business, right? It's bad for crooked business people. Right? It cannot be bad for business. I mean, the message is no one is above the law. And we were like teenagers, right? Where politicians were acting like they were above the law. So they are getting an education. And it's very good that it's happening now. It's overdue. It should have happened a long time ago, but at least it's happening, right? Yeah, and I agree with Piero, it shouldn't stop right now. It shouldn't stop with the Workers' Party, because then we'll leave with the story that it was politically motivated, and it's not politically motivated.
Absolutely right. Absolutely right.
Tom, how has this changed your perception of risks and opportunities in Brazil? I mean, were you surprised to see the level of corruption that existed as somebody who's been investing in that market for a while?
You know what? Unfortunately, it seems to have ebbs and tides when you get down to it. But I think relative to the past, everything that has gone with the change in Brazil over the years, whether it's economic liberalization or financial deregulation or better institutions across the board, and believe it or not, more accountability. It does have ebbs and tides, and it always seems to be a political crisis that precipitates change more often than not. And we've had at least 4 periods like this since I've begun investing in Brazil. So I never like to see it. It always pushes the economic miracle back a bit, but at the end of the day, I'd much rather have it addressed and it developed and worked through, so the next realm will be that much better in terms of where Brazil is as a country, where its people are, because there's some tremendous opportunities in Brazil. That's one reason we're invested there. Whether it's the demographics, whether it's the natural resources or the low labor cost, or an increasing middle class. Brazil has always had a lot of potential, a lot of opportunity, and it's just a matter of addressing some of these issues to take it to the next step, where it can be a tremendous economy and one of the leading, if not, the strongest economy in the Latin American region and worldwide, hopefully.
I mean, it's very easy for, I've talked to a lot of investors who are a little bit cynical about this perspective, saying, oh, we're in the same cycle again. There is something fundamentally different now, as Piero is referring. I mean, to see a Marcelo Odebrecht or Andreas Teves go to jail, I mean, this is quite dramatic. These are I'm trying to think of the analogy that you'd have in a place like the United States. These are some of the most successful, billionaires running really enormous businesses. And so the level of accountability and and again, public outpouring, as Flavia was discussing. You can see a fundamental change through democratic institutions and accountability happening. And when I look around the world and compare to other emerging markets, obviously this is something that you see happening in Russia, right? So that is why I think their sophisticated investors are taking a very positive long-term outlook, looking 5 or 10 years down the road. We do have a little bit of time. I don't know if anybody has any questions. Raise your hand. Ooh, lots of questions. Okay, front row right here. Is there a mic yeah, here we go. There's a mic coming.
Thank you. Johan Elias, I have invested in Brazil for, I think, better part of 15 years. Your point is spot on, and if you want to halve the corruption, if not more, you have to reform the financial or the funding of the party political system. Yeah. As an example, it costs more to run as a senator in Brazil than the Conservative Party in Britain spends on the general election campaign. Something is fundamentally flawed there. And you need to put caps on spending. And the other thing you need to make illegal is the vote buying, which is absurd in a country like Brazil, where groups sell their votes, usually to 5 different people at the same time. But it elevates the cost to something that is just not sustainable without corruption. And the other part is the weak legal system. I mean, if you invest in Brazil and something goes wrong and you want to pursue somebody, forget it. It will take 15 years. There are too many obstacles in the legal system to actually get to collect money from anybody. And here again, you have corruption going on in connection with that. And lastly, you have to put people behind bars, not for a few weeks. Maluf is a good example. Yeah. I think they found 300 million in one bank account, and he walks out of prison almost immediately, goes under house arrest for a few weeks, and that's it. It has to. People really have to be punished if they do these crimes. And so my question is, having said all these things, but I'm very passionate about it, and that is, what would you tell the next administration, hopefully we'll have a next administration, that they should do in order to achieve this? Because this is very complicated.
Listen, to your point, I think, yeah, it's complicated to change, and there is some fundamental changes that must be done from the constitution that allows the political reform, etc., etc. To your point, some of the issues that you raise have somehow been addressed recently. For instance, you talk about the courts that take 15 years, but on the other hand, I mean, private arbitration is accepted by the Brazilian courts today, which was not 10 years ago. So if you draft a contract with private arbitration, that's a way to solve some of the problems. So there is progress coming on, and again, even if the legal system is bureaucratic, it's complicated, etc., and it's very difficult to go after someone, I think there's a lot of these things are changing recently. So what the new administration should be doing and looking immediately after is what Mario points out, the fact that we have a fiscal bomb planted there. I mean, states are not paying the salaries to their employees, because they get into a level of expenses that is you cannot manage that anymore there. So they got to act immediately to cut the grass or the high grass there, and look at the next one, on the next level. Just after there, there's too much to be done in too little time. I think that what we talk here is, but you got to recognize that some of the issues that you touch, they changed it in the last. They're not perfect.
I would only add, not only you asked what we would say. I said, I told some of the people who are mobilizing for the new administration, fiscal reform, political reform with district voting. That's the thing. You have to know to whom you voted, and not party voting, not take the soccer player star, and he brings 10 other unknown people that are sitting in the Congress that you only know them when they're going to vote for the impeachment, and you saw what's our Congress? It's, you know, this 500 people that you are scared about because they do not represent Brazil. So these two, for me, are the two critical things: fiscal and political reform. And you know, the legal reform, I agree with Piero. There has been a lot of evolution in the recent years, especially with private arbitration. The one that is worse is labor. Labor law is still very, very, very
It's a
bad.
nightmare.
Yeah.
It's a nightmare.
Okay, one more question. This gentleman had his hand up first. We'd just be very sorry back there with a white shirt. Okay, so please just don't
Quick
just ask the
question.
question.
How do you, the population is mobilized and it's against Congress. Congress lost legitimacy and we need to pass fiscal reform. How do you think people are going to receive new laws being passed by Congress that has absolutely no legitimacy?
If they are the reforms that are needed, people are going to accept. It's going to be painful. There's a lot of different interests in different sectors. That you can expect a opposition from the PT, okay, and from some on the left side. But again, the PT is the PT. They have 25% of the population. They always had 25% of the population, okay? I mean, they never won a election in the first round. They always had to go to the second round. So they are what they are. You cannot get scared about the type of opposition they're going to make at this point in time. They're going to do what legitimately they always did, but they're not going to get more than that. So the issue here is the benefit of the population and how they're going to accept that, you know, and how this is going to be communicated to them, okay?
Great, okay, time, session over. Thank you so much to all of you for being here, and thank you to all of the panelists.